very well known around the world, and that company was Infosys. And I worked very closely with Narayan Murthy and Nandan Nilekani, and I'm still in touch with them, and they are great mentors. Especially Nandan, I'm very close to him, and I make these points to specifically mention the approach to culture building and value-driven company building that has influenced me from a very, very young age, as I just started in the formative years of my career, you could say. So I spent 13 years, the first 6 years, building the watch business into one of the largest companies in the world. In the watch business, we know where Titan stands, and was part of the team that led the launch of many successful Titan sub-brands and brands. Sonata, I remember, was a big one that we launched. Titan Slim, the Edge, the slimmest watch in the world. All of these were part of the responsibility when I was in marketing. I subsequently moved to sales, again worked with a great retail leader in India. Biju Kurian was my boss, again a mentor to us in Melorra, for which we are very grateful. And spent 3 years helping to build the Titan distribution network across the country in the deepest, remotest parts of India that one could think of. In 2000, as many of you would know who are investors in Titan or have watched that company, the jewelry division was not doing well. We'd been around for 4 years, and the jewelry division, whose brand name is, of course, Tanishq, was struggling. And we were under threat of closure by the Tata Group. So I was asked to become part of the core leadership team to head sales and marketing in Tanishq, reporting into the then CEO, Jacob Kurian, again, an amazing visionary leader who I was very fortunate to work with. And thus began a journey of turning around Tanishq. And luckily, we had been extremely successful over the next 4 years. Within 2 years itself, the Tanishq turnaround happened, and we were able to post Tanishq's first maiden profit. We went from about 100 crores to nearly 1,000 crores over the subsequent few years. I went on to head other functions. In fact, I was asked by Bhaskar to create the merchandising function, head the supply chain, started the supply chain function jointly working with McKinsey, and went on to lead design too. So I saw most of the business functions at very close quarters and was able to help build the team of Tanishq back in the day. And once the domestic business was on very strong wicket, and most of you would know the pioneering efforts that Tanishq introduced back then, be it the Golden Harvest program, the exchange program, Carat Meter, Impure to Pure program, so many of the initiatives, the collection launch strategy, India's first working women's launch, which working women's collection, which subsequently became Mia, the brand, and so on and so forth. So truly great learnings along the way. And in 2004, when the domestic business was doing very well, I was asked by Bhaskar to then spearhead the launch of Tanishq in the US. And I did that for the next 3 years, moving to the US, based out of the Tata Group head office in New York. There we created the go-to-market strategy and got board approval and helped set up the first set of Tanishq stores in the US and signed up great malls to open our pilot stores, which one did towards closer to the recessionary years of 2008. In 2008, I took a sabbatical and went on to come back to India to join Kaya and head operations at Kaya as part of Marico, and spent 2 years leading the business there and growing it exponentially, the footprint and the revenue. And subsequently, I moved to Dell to head retail for India with a mandate to open 1,000 Dell exclusive stores, which is a very ambitious program back over a decade ago. And we were able to successfully do that. And we did open 1,000 Dell stores, which accounts for a majority of the Dell's consumer business in India today. And Dell stores dot the entire landscape of the top cities and towns in India today. I also ran all of the large format retail business for Dell in India as the director for retail for Dell. So this has been as fast as I could do in terms of my career background. The reason I talk about it is the importance of my experiences in building what I am building today with Melorra. Late in 2014, I thought about getting into entrepreneurship. And the reason was a very different reason. I truly believed that India would embrace the digital economy faster than many other countries in the West. And that's the reason that I didn't see that there were enough corporate opportunities. Flipkart back in 2014 was still being written off as an experiment meant to be failed, and so on and so forth. And I, however, did not agree with a lot of the organized retail counterparts that digitization of India will not really take off, and organized retail was the only way to penetrate India. And hence I decided to cross the aisle and bet on the then fledgling e-commerce industry, as it was called then. Now, of course, there are so many divisions in the e-commerce industry itself. And I created a business plan for the building of Melorra as a digital company, embracing fully in the entire supply chain technology at every part of it. So obviously, I had spent many years in the jewelry industry, both in India as well as globally in the US. And I came to believe that the jewelry industry was suffering from certain problems, and more so in India, I would say, but globally too. The legacy companies have not been able to offer what the younger generation woman is looking for, or the rise of the self-purchasing Gen Z and millennials. Women today are very different from their grandmother, or mother's era, as we all know. The younger generation is super confident, very much on social media, lives a digital life more than a real life, more than a physical life. And world over, whether it is Tiffany or Bulgari or any large jewelry company, has struggled to understand this consumer set. And same is the case for all of the larger players in India, who are heading off in a particular direction, which is not in keeping with what the younger generation is looking for. And so in recognition of the young demographic in India and the rising education, confidence levels, and most importantly, the fashionableness, if there is a word like that, of the younger woman in India, we felt the time had come, and perhaps the consumer was ready long back. In fact, Melorra is an idea whose time had come long back, and we were just taking advantage of the current consumer shifts that have been taking place in India for a long time. That is how the idea of Melorra came about. On a business plan, we raised a record $5 million seed round. Back then, 5 million seed rounds were a rarity. And this was led by Lightbox venture capitalists. And thereafter, the next 2 years, we set up what is popularly called the moat, or our differentiators, of which there are many. And I will try my best to explain in this presentation what some of those differentiators that Melorra has brought to the global jewelry industry are. That's how Melorra journey started. Over the next 2 years, we invested a lot in both technology, building up the technology tech stack, the tech teams, the design function, which is very core differentiator of ours, the manufacturing prowess, and the ability to do something that the global jewelry industry had never done, which was to try and manufacture without inventory. For those of you that follow the Indian jewelry industry, which is very, very large, and many multi-billion-dollar businesses have been built in this industry over the last decade or so, you would know that while it's a fantastic industry where you can get scale in revenue very, very quickly, but the industry does have a couple of challenges, which is very large-scale inventory investments. Luckily, that risk is a little bit mitigated because we're talking about large investments in an appreciating asset like gold or even diamonds, but still significant capital is required to build scale in jewelry. That was one problem. And the other was, especially if you're in gold jewelry, which is, India is largely a gold consuming country, 85% of the industry is gold, you would suffer from low margin problem, not absolute margin, but low percentage gross margin problem. So in order to be able to resolve these two problems, we set about our minds and we examined the entire supply chain of the jewelry industry and brought to the industry disruption to the extent that these two things we have been able to take care of substantially. And you will see that over the course of the next few slides. How do these move? Yeah. So essentially, we are redefining the jewelry industry from being traditional, archaic, meant for your grandmother, to a new age, 21st century jewelry company, which is, of course, fortunately, having a woman founder who certainly understands women better than men. Let's all agree to that. And we have brought in global fashion trends into jewelry design for the very first time globally. This is not just an India first concept, mind you, this is a global first concept. We don't design for the traditional wedding jewelry occasions, not because that's not a large market, it is, but because it is an overcrowded market. India has one of the largest density of jewelry stores in the world. We have 500,000 jewelers, including the unorganized sector, of course. And most of these jewelers cater to the wedding market. So India certainly does not need one more wedding jewelry company. In addition, we all know that organized jewelry companies, the branded jewelers, are all chasing the wedding opportunity. So we believe that the daily wear opportunity is significantly underserved, and that is what the younger women are seeking more and more. So this is a perfect opportunity of a confluence of factors, if you will, where there is a young demographic which does not look for very heavy traditional designs, which only goes away into the bank locker. I'll bet you all the participants on this call know and have experienced that all the jewelry that the women in your households buy pretty much goes into the bank lockers of India, rarely to be seen or worn again. And hence, women are looking for choices for jewelry that they can wear on a daily basis. And that also helps in making the jewelry far more affordable and accessible. So that is what Melorra specializes in. We offer the largest range of lightweight gold designs in the country today. And all our designs are extremely comfortable, affordable, and light. And most importantly, fashionable to be worn on a daily basis. Historically, jewelry has been bought as a store of value or as an investment-led purchase. And the larger the ticket size and the more it goes towards wedding jewelry segment, the more it becomes an investment-led purchase. And therein lies the problem of low margins in this industry, because then as an investment-led purchase, the commodity mindset is coming in, where there is a reluctance to pay for design and design premium. Hence, we have stayed away from that part of the industry. And we have presented Melorra, a brand, the jewelry, the pricing as a non-investment-led purchase, which is more priced like a brand, not a commodity, and more positioned as a true fashion accessory. It might surprise you to know, but nothing that you see on our website or app, and I'd encourage all of you to download our app and experience Melorra firsthand. Or check us out on, we are available on all platforms, mobile, desktop, app, all of it, Android, iOS. And you will notice that there are over 16,000 designs. And the beauty of our business model is none of them ever got created. That's right. We never created any of these designs physically, which means that there has been no investment in making the finished goods inventory, nor has there been any investment even making in the prototype of this design. Everything that you see online is only a digital design. We launch products only in the virtual world, and we are the only ones to have pioneered this concept of virtual design launches. Let me tell you what this really means. This model was put to the test when COVID arose. 2 years ago, the world collapsed, as we all know. And when it did, and I remember I was invited to be on a conference of retail CEOs of India, and all other participants were CEOs of retail companies that had physical stores and physical inventory. And they all bemoaned the fact they could not launch any products for over a quarter, simply because the factories had been shut down. Until you have a factory, how can you produce a prototype? How can you produce a product? But Melorra proved to the world in that time that our business model works and works very well, because we were able to launch in the exact pace that we had always launched pre-COVID days, because whatever we do is simply virtual. So our new product launches the pace of it never abated all through the COVID era, whether factories were shut or not made no difference to us really in the new product introductions. We are a largely digital distribution company. We are India's largest online gold jewelry company today. And we deliver to every single pin code in India. This ability to deliver everywhere, we only started 2 years after our launch, to be precise, from April 2018. And in this short time, we have become the largest distributor jewelry company in India today, with 10x lead in the towns delivered to compared to the market leader in India. So the strength of our digital distribution model has been proven yet again and again, and we have the logistics network and the partnerships to be able to deliver everywhere. This again was highlighted, the strength of this digital distribution, when the government of India, which has been introducing a lot of regulation to get this industry more organized over the last decade, went about mandating the hallmarking of gold jewelry. The law was brought into action last June. And because there were not enough hallmarking centers that the government had set up in India, where the gold jewelry has to be necessarily sent for hallmarking, it was a challenge for even the government of India to declare hallmarking of gold jewelry as mandatory across India. So they restricted themselves to the top 256 districts, because most of the hallmarking centers are in the larger cities. Again, we didn't have that challenge. We have been delivering hallmark gold jewelry from inception, and after April 2018, everywhere. So we have gone way beyond the Government of India mandate and have been delivering hallmark gold jewelry to every part of India. Anybody, anywhere can access hallmark gold jewelry from our website or apps. So that's another huge strength. And this regulation has only boosted our growth prospects even more than before. We operate a very unique no inventory model, which really means that once you place an order online, then we will deliver it to you after we manufacture it. We do not hold pre-made inventory, and which means that you will have to wait, of course, but the waiting time for a manufactured piece of jewelry, we have been revolutionary in bringing it down. Today, we have the capability to manufacture gold jewelry in 5 days and diamond jewelry in 7 days. This is an unprecedented advantage of Melorra in terms of manufacturing strength. And thereafter, it takes time to do the hallmarking and then the logistics. So if you're in a metro, then you will get the product quicker. And if you're in a smaller city or a town or a village, we have also delivered to a lot of villages in India, then obviously the logistics time will be larger. We follow very tech-enabled manufacturing processes, in the sense we don't do handmade gold jewelry like the rest of the industry. We do casted gold jewelry, and we do 3D printing only. All of our molds are 3D printed. So every single product is made after a customer places an order, a 3D printed mold is created, and thereafter casted gold jewelry is created, manufactured, and then shipped to all parts of India. This again is a very disruptive manufacturing process that we have pioneered. So as all of you know, and those of you that have been watching the private market side, globally, there is the rise of the DTC brands, as they are called, which are digitally native. We have been born in the internet. We live our lives in the internet, and we do have some physical presence when we embrace omni-channel strategies, but our predominant offering is always online, and even our offline centers, whatever there will be of it, will be very, very tech-led and completely different from traditional retail industry. So we have solved or we have cracked the code of a large DTC brand. There are 600 DTC brands. More and more are entering the fray as there is a huge amount of investor interest in this area in India today. And of the 600 DTC brands, there are only 50 brands that have crossed 100 crore annual revenue in India. And out of the 50 brands, there are only 8 DTC brands that have crossed 300 crore revenues. And Melorra is one of those 8 today. We crossed 300 crores last financial year. And there are only 3 brands out of 600 that have crossed $100 million revenue, annualized revenue run rate. And we are going to be part of that extremely rarefied club 4 to 5 months from now. Today, we are at a $75 million run rate. So as you can see, we are very, very close, knocking distance from the $100 million magic mark, which very few DTC brands have cracked. As all of you know, the advantages of DTC brands are that we are very tech-oriented and our playbook demands technology disruption right through the supply chain. And that is what we have created, as I explained in my previous slide, right from our inception. And this tech backbone, if you will, enables companies and consumer brands to scale faster than any other offline consumer brand has been able to do. And that's real advantage of a DTC brand. We are able to bring the classical factors that define a DTC brand, are very enhanced consumer insights, data-led, personalized shopping experience, a huge range of offering that you can bring, a maximum product innovation. DTC brands are known for it today, which are tailor-made for unique consumer needs, disruptive technology-led solutions, be it at the back end or at the front end. Typically, DTC brands disrupt using technology at the front end, but Melorra is a great example of a company that's doing it at the back end too, through our unique no inventory, just-in-time manufacturing model. When DTC brands start scaling, the offline component kicks in, the omni-channel strategy. But the way DTC brands do omni-channel world over is very different, as I mentioned, from traditional retail. And we do not take large spaces. We take very productive spaces, which entail very low retail costs. And every offline experience center that Melorra sets up leads to a greater revenue enhancement in our online business in that particular catchment where the experience center has come up. And today data shows that for us. And so it's a highly scalable playbook for a DTC brand that we have created, which we have fully leveraged. All aspects of DTC brand strengths, Melorra has fully leveraged today. So we have the largest offering of designs. We launch 75 designs every week on a Friday, all of them inspired by global fashion trends, which is again unique to us. And we launch 300 designs a month, which is quite unprecedented in the world of jewelry. We have an innovative tech stack, which has been built completely in-house, may I add, which drives customer engagement and sales, where we have all of the consumer shopping experience enhancements like virtual reality and all of that. And in fact, we're going to be a pioneer in Indian e-commerce within 6 months when we bring the concept of digital humans for the first time into shopping experiences online. So all of this enables us to have a better ROCE at steady state than the traditional offline branded players. We have grown very well over the last few years. And of course, FY21, we were impacted in the early part of the year when everything shut down, including e-commerce companies, which the government of India withdrew that requirement in the second COVID wave, thankfully, and we were able to ride that wave of success quite well. And we have, tremendous amount of proof points today of our success from any metric that you can think of. We have been able to demonstrate very, very good traction. So
there's something that you mentioned that always caught our attention. Inventory is the enemy of innovation, which
yes.
is what you covered. Go on.
Yes. And I say that with years of experience behind me, building brands which have been very inventory led. And I have seen in my time in many companies and consumer companies that over a period of time, the inventory slows down the innovation because companies start becoming very focused on internal metrics like naturally inventory stock turns and capital efficiency of what you have and so on and so forth. And the operational efficiency requirements of companies when they start scaling moves the management's eye away from innovation, because you can't really have a lot of inventory and still quite nimbly launch a lot of new collections, because you have to very accurately predict. The sales forecasting tools have to be at an advanced stage. And even if you have the most sophisticated sales forecasting tool, no tool has been invented till date world over which can accurately predict the sales velocity of each and every design of a company or each and every SKU of a company. That tool doesn't exist and simply cannot exist. Now, if you have to start guessing what will move and what will not move, you're already on a very slippery slope, because you have on one side an opportunity loss possibility where you are not accurately forecasting sales velocity of a fast moving SKU. And on the other side, you have a pileup of inventory of slow moving SKU, which the company thought will sell very fast, but the consumer simply didn't warm up to it. So consequently, there are a lot of imbalances in the inventory, and you start on one side losing sales and on the other side becoming very bloated and capital inefficient. And in all of this process, you are not in a position to launch new collections very quickly, because you have so much inventory of the older SKUs that you are now having to liquidate first before you put more investments into newer products. So because of all these challenges of managing inventory, it's a very inefficient way, if you will, I decided to challenge ourselves, the Melorra leadership team and myself, to see if you can actually have a model where you don't have inventory. Is it even possible, or is it a very revolutionary idea? That is what we set our minds to. And it was a huge challenge, to be honest, Varun, to be able to manufacture without inventory in the first few years. We used to go wrong all the time. Once a customer placed an order, and when we started the manufacturing process, our weights, the final weight of the design used to be either too high or too low compared to what we committed to the consumer, which means now the pricing is impacted, which means the consumer is not happy. So in the first 2 years, 30 to 40% of our orders used to be in the exact weight that we would commit to consumers. And that is the reason that I did not open up delivery capability for the first 2 years, because we were not sure if we could take a lot of demand and still manufacture without inventory in a just-in-time way. However, today, 96% of all orders that we receive from consumers across the country and now the world, we are able to manufacture in the exact weight that we have committed to consumers, which means there are no negative surprises on pricing either. So this has become a huge advantage, and we have lived the difficulty of our decision not to have inventory, and we have been able to overcome those difficulties. And today we have a process set up with all of our vendors where we are able to manufacture to a customized product without even having ever made a prototype of it. So this is a huge advantage that we have arrived at with difficulty, which is really helping us to scale more and more. So yes, we have been able to get away from the inventory problem that haunts most industries. So that's something that, thanks for the question, and I'm happy I was able to answer it a little bit more in detail. And it is important not to understate, our work in that area, because that is a huge business model advantage. So on one side, the consumer is benefiting because they are constantly seeing innovation from us. There is no way that we could have launched 75 designs if we were carrying huge inventory for each of those designs. That's just not possible. The amount of capital required would be unbearable for any company. So on one side, the consumer is seeing constant new product launches from us at a pace that they are never seen before. And at the same time, the business model is inherently capital efficient. We don't need to raise a lot of money to scale the business, because we are not investing in high capital inventory, especially in this industry. Inventory investments are very, very large. So actually, and also the beauty of the no inventory just-in-time manufacturing process is it's good for the planet. So even from an ESG perspective, this is a much more sustainable way of building a consumer company, because we don't have inventory. We only manufacture upon receiving an order. So there is no wastage at all in the system. And we all know the challenges that companies like Zara and H&M have in $1 billion or more than £1 billion investments in inventory that don't sell. And where does that inventory go? The unsold fashion inventory. It goes into landfills. It goes into the oceans. So it's not even a sustainable business idea to have a lot of inventory of a lot of SKUs. So even from that perspective, a no inventory model is a hugely attractive model for all of us to think about. As I said, we have enjoyed widespread consumer love across the country. Today, we have seen great amount of product market fit. We have delivered to 2,800 plus towns in India. And this is a huge advantage for us, because now we have the logistics capability to deliver everywhere. And we have the partnerships in place. We have the warehouses in place, and we can deliver all over this vast country. So, and we believe we are just getting started. 2,800 towns is a very small drop in the ocean. We might be India's largest distributed jewelry company, but it is still a very small drop in the ocean today compared to the number of towns and villages that there are in India. And out of 2,800 towns, I do want to emphasize that 375 villages we have delivered to. Rural India, which is the definition is less than 10,000 population villages, we have been able to deliver to. And this is not the greatness of Melorra, please don't mistake me. This is the greatness of India today, where people sitting in the remotest villages of India have access to everything that their metro counterparts have access to. They can access any brand of their choice digitally. And this is a huge potential of the digital economy that is unfolding in our country, which COVID, as you all know, has only accelerated more and more. But what is 375 villages? It is nothing when you remember that India has over 620,000 villages. India is a nation of villages, and there's a lot of money there, because remember, 60% of all gold jewelry consumed in India is consumed only in the villages of India. The consumption of rural India for gold jewelry is much bigger than the consumption of gold jewelry in urban India. But there are no organized retail plays over there. There are no brands over there. But today, you don't need an organized footprint, offline retail footprint to penetrate every part of India. Digital distribution serves the need very, very well. So we have registered, of course, our best year last year, came out of COVID. And thankfully, in fact, in a way, I would say COVID helped all e-commerce online companies world over, and we have been the beneficiaries of it too. And we closed FY22 at $50 million, growing by a whopping 4.7x over the previous year revenue. We have seen a 51% improvement in our PAT margins for the year, and over 50 million visitors accessed our digital platforms over the last year, which is a 3x growth over the previous year. And app has emerged as a very big engine of growth for us. I would be remiss if I didn't mention how strongly the app is growing. And we are very big believers in app strategy. App is a very sticky platform for consumers to shop. It really helps consumers in small towns and villages to shop with lesser internet bandwidth issues. And it is also a platform which enables us to engage with customers and gather a lot of data. Remember, DTC brands are very data oriented, and the app is a beautiful platform that enables us to collect a lot of data and personalize shopping experiences to consumers. We can deliver a far superior shopping experience on the app than we can do on a desktop or a mobile site. So we have seen a 2.4x growth. Today, we have about 2.3 million installs And we feel quite confident that this year we will see a whopping 10 million installs of the app in the FY23 period alone. I have been very fortunate to lead the best of the industry. Melorra is at a unique cusp of fashion, jewelry, and e-commerce. And we have been able to bring together some of the finest leaders in this country. Naveen Duggal is our CFO. He is a veteran CFO in India. For those analysts that have been following Marico, you would know he was part of the Marico team in finance, and later on he was the CFO of Health and Glow. Deepshika is our head of design, and all the credit of our very unique design process must go to Deepshika. She has been a day one employee. She literally started Melorra with me, the journey, and she was the first graduate of NIFT Gandhinagar, which is the best design school in accessory design in the country. And Deepshika has shaped many, many young minds, sits on many juries, and is an award-winning designer herself. But it would be interesting for all of you to know that we have a very large design studio, virtual design studio, as we like to call it, because it's a virtual launch of products. We have discussed that. And however, except Deepshika, everybody else in the jewelry design team is a fresher. We do not hire experienced jewelry designers because we feel that it's very hard for conditioned minds to get unconditioned. And if they've been trained in the jewelry industry, they cannot do what Melorra does. So we take fresh graduates from NIFT campuses across the country. We put them through a lot of assignments so that we handpick the most talented designers in this country. And we offer also internship opportunities. And we train them in our own unique design process over the next 3 to 6 months before they become productive. Mayank is a veteran technologist in the country. He helped set up Tesco's platform when Tesco went online in the UK. And he used to be in Amazon before joining Melorra for many years. And in Amazon, Mayank used to head globally the product detail page, which is considered the most important page in an e-commerce company's website, because that's the page where you make your decision to add to cart. So Mayank led that for all geographies of Amazon. He's been with us for a long time now. Deep is our head of HR, comes with a significant experience in Barclays as well as with Lenskart. Kushal, head of marketing, was the earlier erstwhile VP marketing of the Jubilant Group, Domino's, and before that spent many years with ITC. Prashant is our head of operations and customer care, and Prashant is again a veteran e-commerce industry expert. He helped set up Flipkart's first customer care team back in 2010 when Flipkart just came about. And thereafter, he's been with the startup ecosystem. He spent 8 years in Flipkart in leadership roles. Suman heads merchandising for us, was both with offline and online retail prior to this with Reliance Trends and Snapdeal. And she again has been there for a very long time with us. Vivek Jhavar onboarded with us a couple of years ago when we decided to start the omni-channel journey. And he spearheads all of our offline experience center footprint, both the expansion of it as well as the operations of the already opened experience centers. Rajiv heads product, again, completely from the digital economy, was with Truecaller. In fact, used to head ad operations for Truecaller before they went public, which accounts for 80% of all of Truecaller's revenues globally. And before that was with Daily Hunt. Kanan heads manufacturing with us, again, has been with us from day one and was ex-Tanishq and ex-Bluestone. The reason I talk about the leadership team in detail is, of course, I'm very proud of what they are doing to build Melorra. But more importantly, I think for investors, a company's future is determined by the team and team alone. You know, a lot of people can strategize and come up with big thoughts and ideas, but a team that has proven execution behind them is a very good bet for investors. So we have all of the building blocks in place for becoming the undisputed leader in the category, be it a massive market opportunity. I think nobody can overstate how large the jewelry industry opportunity in India is, or it's the second largest industry in India after food and grocery. We all know that. We have unmatched design capabilities. We have a very strong tech backbone to help us scale this business very capital efficiently going forward, and a unique and disruptive business model in terms of operating a no inventory, just in time manufacturing that we have been able to do at a very large scale. And we have a proven DTC playbook at the front end too, in terms of consumer insight building and very strong data analytic platforms. And of course, we now have sound financial performance also. So the market opportunity, it's a $50 billion demand for everyday jewelry, which is growing faster than the wedding jewelry segment. And there are only 4 brands, including Melorra, in this category, all of which have emerged over the last few years, all of which are growing very fast. But again, unique to Melorra is that the other 3 players only do diamond jewelry, which is a 15% of the industry only. We do full stack jewelry offerings, which means we do offer gold, diamonds, gemstones, and even semi-precious gemstones. So we are the full suite of jewelry offerings for the daily wear segment. We are the only ones that offer daily wear gold jewelry in this country. Organized players are very much on track to take control out of family local jewelers, as they are called. As we all know, there has been a greater and greater shift towards the branded players from the unorganized mom and pop family jewelers in India. And a lot of big brands have been the beneficiaries of that shift, or have led the shift also, would be an appropriate way of saying it. However, we are taking that to a different level altogether. We stand out in the organized jewelry sector for our digital disruption and our technology-led disruption and our design disruption and our pricing disruption. So we do have a design refresh that is unprecedented, where we launch 300 designs a month. Wedding focus, very low, which means that we are not governed by the commodity pricing of the industry, which the industry suffers from. We are tech-enabled in manufacturing compared to the traditional karigari-led handmade approach. We have minimal inventories for our offline, 0 inventory for our online. So again, does not require much capital to scale this business. I have said this publicly many times, and I will say it today again. We are the most capital efficient business that there is today in India. We have only raised $55 million so far to have come to this stage. And in fact, the initial investments were higher. From now on, the investments are going to be much lower. In a lifetime, we will not require more than $120 to $130 million to build $1 billion company. Our average ticket size is much lower than the traditional jewelry industry, which means we are bought more as an accessory. We are gifted a lot more than other jewelry players, which means the frequency of our purchase is higher than the industry at the affordable price point of roughly $350. And of course, we are a company brand born in the internet, and internet is a very core part of our distribution capability. In short, I think it would...
If I can interrupt
yes,
once, Saroja, there has been a lot of questions regarding your average order size, your customer funnel, how are you acquiring the customers, or some of the operating metrics. Whenever you can cover during the presentation or towards
I think I'll cover that a little bit later, so
yeah,
it should get covered. Yeah. So our vision is to build the Zara of the jewelry industry, bringing fast fashion principles into the supply chain. However, we have gone several steps ahead of Zara. You can say we are today's Zara, a digital Zara for the internet economy. And we launch collections faster than Zara. And we are a no inventory Zara as well, with a digital distribution. So our unique model provides the opportunity to have high scale, high margin, and a low capex business, which we have been living for the last 6 years. So we lead with fashionable gold. 100% of our designs are exclusive to Melorra. We don't buy designs from the market, unlike all other industry players. It is a Western-oriented design ethos, which means we follow global fashion trends when we launch collection, which really means We can sell to any woman anywhere on the planet can wear Melorra designs. It's a globally relevant design. And we take for each collection that we launch 30 days, end to end, from the start of the design process to the launch of it. We have also positioned Melorra more as a newer age business that can be matching the lifestyle needs of the younger woman today. It's more casual, it is fun, it's for daily wear, it's certainly not bridal, it's fashionable and progressive. We do present Melorra brand as meant for very progressive young women, and certainly a global positioning. Manufacturing innovation, low capex, we spoke about it extensively. Vendors manufacture our designs. We don't own factories because India is the global hub of jewelry manufacturing. We have world-class facilities in India that we would be foolish not to take advantage of. And so building our own factory is not a requirement when you're sitting in a country like India. And we work with plenty of vendors across the country, but they manufacture under license our IP, which is our own exclusive designs. Distribution, I can't speak enough of the strength. I think in the days to come and the years to come, this will be one of the biggest strengths and the biggest reason Melorra will become the largest jewelry company in this country, because of our ability to deliver seamlessly shopping experiences and products across the country. This is our unique design process that we have set up, an institutional design process. We are the pioneers of it globally. We start with sending fashion experts to the Paris Milan Fashion Weeks. We get an exclusive trend report as soon as the runways are done for autumn, winter, and spring, summer. And we have exclusive access to these trend reports 6 months before the autumn, winter, or spring, summer seasons can kick off. Thereafter, we distill the trends with our global fashion experts, providing the inputs to understand what of these fashion trends will be brought by high street brands to India. And we then set about giving one trend to each of our jewelry designers. Our merchandising team, which is the analytical arm of the company, will understand the trends forecasted, will understand our sales history, will understand what sort of designs will work, at what price points, and what should be the embedded margins for each of these designs. They will give a design brief to our in-house design team. We don't work with freelance designers. We believe design is a very core differentiator for any innovative company, and it would be foolish to work with freelancers or outsource design. So this is a unique strategic strength of our business, and hence we hire and train our designers in our own way. And each designer then designs in trend with a collection launch for every Friday. And every Friday when we launch a collection, we also, since we have a huge trend report that we have got for ourselves, we put out authentic trend information. It is a content-led commerce play. Today, younger women are very particular about having a lot of content. There's a huge amount of content consumption, be it in the form of short form videos or long form videos on YouTube, Instagram, or even textual content or lifestyle imageries. It is content all the way. Most of us live our life more hours in a day virtually than we do in real world. And the younger you are, the more that statement is true for you. And hence, we produce a lot of fashion content, both online and in our offline experience centers, because we have access to these global reports uniquely. Thereafter, we take 30 days, we launch a collection which is inspired by these fashion trends. And this approach has been loved by consumers all across the country, both online and offline. We have now 11 experience centers across India in Mumbai, Delhi, Bangalore, Lucknow, Bhopal, and we are unveiling many, many more in the weeks and months to come all over India. And if you are in any of these cities, I would encourage you to go across to our physical experience centers, which are in the malls, the premium malls of India. In Mumbai, we are at Palladium, for example, and read for yourself, see for yourself what consumers say about us, literally in their own handwriting, where they have written in the visitor's book, kept at the front of each and every experience center. And you will be convinced that this is the kind of a product that women have literally been waiting for. In the words of a consumer in our Bangalore Experience Center, she said, this is finally the 21st century jewelry shopping experience that India has been waiting for. So these are the sort of examples, and product is loved universally. The designs are loved universally by all women. So in gold jewelry, we don't do traditional Indian designs. This is the kind of designs that we are launching. And please note, this earring on the right of the slide is a perfect example of a Melorra design, where it is not only in keeping with the latest trends of checks of that season, but also it's an intelligent design where very little gold has been used, which means that the product is very affordably priced. And that is the advantage. Even the earrings I'm wearing, I can't see if any one of you can see it, but if I were to take this off and put it in your hand, you'd be surprised how low the weight is. These are just hollow balls. So it looks big, but it costs nothing. And that is the lightweight approach that we have really been very, very good at. Because of our design strength, we have the courage and the confidence to tell consumers that if you like our designs, you better pay a premium for it. If you can pay for Apple, so can you pay for an Indian brand. And we have the highest pricing in the industry today, and we have still been growing so very well. Today, the young Indian consumer who is globally well-traveled or who has global exposure, even if they have not traveled through Instagram, Facebook, YouTube, etc., does see good designs and understands that if you like the product, if you like the brand, you should be willing to pay a premium for it. And this is the way that we are changing the gold jewelry industry from a commoditized industry to a branded play, which means we have the highest gross margins in the industry. When I say highest, we have twice the gross margins in the jewelry industry of the market leader in this industry. Manufacturing, we spoke extensively. For those of you that are keen to understand it better, we do have a 10-minute video that we can share separately with you. Please do reach out to my team for that. Marketing, very important component of scaling a DTC brand. And I think there were questions around marketing and customer acquisition, etc. And most of it has been digitally done. We don't spend that much money on typical ATL channels like TV or print ads, etc. We do it, but very, very occasionally. Most of our advertising is on the internet, on Facebook, Google, the affiliate partners that advertise companies today with the inventory that they hold of digital properties, blogs, all of it. And YouTube, of course, is a very big platform for us to promote our brand campaigns. And Instagram is a very big vehicle. Please follow us on Instagram if you're not already. And as you know, in the digital world, the more you scale a business, the more cost efficient you can get. The more the brand awareness grows, the more the direct and organic traffic onto your website and apps downloaded, and the more efficient the marketing acquisition costs can become. And that's the journey that we have experienced, as you can see from the financial performance on the right of the slide. We have partnered very successfully with one of India's biggest celebrities, Shraddha Kapoor, and she is the third most followed Indian in the world after Virat Kohli and Priyanka Chopra. She has a massive fan following of over 70 million people on Instagram, and we have been working with Shraddha as our brand ambassador for the last 18 months, and we still have an extensive period left to continue for her to be our brand ambassador. And she has certainly helped build the face of the brand and the awareness for the brand across the country. We have done very disruptive campaigns featuring Shraddha, including on the latest IPL. You would have seen our campaign where we have positioned Melorra as a non-wedding choice and questioned the wisdom of buying so much jewelry on your wedding day, which you never wear again. Moving on to some of the numbers that all of you might want to see. We have over 5 million visitors a month, I point out, on our mobile and desktop alone. In addition, we have 3,500 app users 350,000 app users per month, which is not included in this count. Our net ASP is about 24,000 rupees. Net revenue is 45 crores per month last month, which means $72 million annualized revenue run rate. In May, we had, of course, Akshaya Tritiya has been a super duper day for us, both digitally and in offline. We beat all records, and we will be closing in May at about $75 million run rate. And by September, we should be crossing the $100 million mark. And by next March, we should be crossing the $140 million mark. I spoke about the beauty of the digital model, which enables you to penetrate India in a very, very super efficient manner. And these are the kind of towns where we receive orders from. And for those of us that have born and lived in India all our life, I will bet you very few of you will be able to name the states in which these towns are, or where these towns are located, or what their population size is. Most of us have not heard of these towns, except of course bigger cities like Anand, maybe some of you would have heard of. But this is just a sample of the kind of towns that we have been delivering to, or the villages that we have been delivering to, which none of us would have ever heard of. And that is why I'm such a big fan of online channels, to be able to get to the parts of India that organized retail will take decades, if ever, to get to. Today, we see over 40% of our orders are coming from the non-top 53 metros. And when I say metros here, I do want to let you know, these are not the top 8 cities which are considered metros, but these are the top 53 cities which have a population of 1 million plus, which are considered the metros of India. So beyond the top 53 cities, our delivery is about 40%. 40% of our orders are coming from towns smaller than that population. In terms of age groups, of course, the vast majority of our consumers are less than 35 years of age, which is 56% of our consumers. But even the 35 plus category consumer set has been buying from us. And this age group consumer segment has accelerated for us after COVID. Perhaps they were hitherto going to offline shopping centers, but now they migrated in COVID to online shopping for all product categories, and they are continuing to stick with us. This is the breakup of our towns coverage, a more detailed slide, which is why I said there's a massive headroom to grow. We have delivered, of course, to all the top 53 metros. We've delivered to 415 towns across the urban India. Urban India has 415 towns, which means the definition of urban India is towns with a population between 1 lakh, which is 100,000, to 1 million, 1 lakh to 10 lakhs, and we have delivered to all of them. Then semi-urban India with a population of 10,000 to 1 lakh. There are 5,698 towns in India like that. We have delivered to 1,892 towns of that population size, semi-urban India. Rural India has actually 6,40,000 villages, over 6,40,000 villages, and we have delivered to 345. Sorry, I mentioned 375 earlier. I stand corrected. It's 345 villages that we have so far delivered to. So this, which shows you the penetration potential. Of course, in semi-urban and rural India, we have not covered all towns and all villages. It will take us some time before we can do that. But, and the numbers on the left in the light orange color is the daily wear market in these town classes by price point. If you look at price point wise sales, then this is the price point wise sales in the less than 50,000 rupee price point of jewelry by town class. And so there's a massive market out there, which we are yet to fully penetrate, and hence huge headroom to grow. There's only digital penetration I'm talking about. Currently, we have about 5.5 million traffic. If I include app, nearly 6 million traffic on our platforms. And to be able to get to even 300 million online sales by April 25 in the next 3 years, we only need 11.5 million visitors onto our platform. Let me contextualize that for you. All of us know there are 300 million online regular shoppers today in India, and Google projections, all projections talk about 700 million online shoppers by FY26. We are talking about aspiring to a very small fraction of it, which is 11.5 million, roughly, visitors to our platforms, which should be very easily possible. It's not a large target. Conversion rates have been growing in a very big way for us. And we are projected to get to 0.71. And the way to drive that conversion is through app, as well as more tech-enabled shopping, hassle-free shopping experiences online. And ASP, of course, is growing as people get more comfortable. They buy the first purchase at a lower price point, and then the repeat product category is invariably a higher price point. Talking a little bit about our harmonized retail approach, or what all of you will understand the term omni-channel better, I think. So the omni-channel strategy going forward, these are the sort of experience centers that are coming up across the country. You might have seen some of it in Delhi. We are in all the DLF malls. And in Mumbai, we are at Palladium. Bangalore, we have 3 experience centers, the 4th one opening next week, and so on and so forth. Lucknow, Bhopal, all of that. So we are going to be opening 350 such experience centers across the country over the next 4 years. We have a lot of interest from all the A-grade malls in India to be opening a center, and we will be opening more and more of those. This year alone, we have planned to open 60 experience centers just this year, to be able to get to about 70 experience centers by next March, which would be a significant footprint. And at 350, of course, we'd be one of the largest offline retail jewelry companies in India. So the tech-led omni-channel play is helping us a lot in terms of scaling. Leadership, of course, in online shopping that we already enjoy, which will be complemented by digital-first experience centers. There is enough data today for DTC brands, including ourselves, to comprehensively prove that once you set up an experience center, that catchment area, in that catchment area, your online sales also goes up. And we have experienced that too. Wherever we have opened an experience center, not just the sales through that experience center, but the online sales of people in that catchment does increase exponentially. So it helps to build the brand awareness even for our online platforms, and brings down the marketing investment substantially, which is a very important reason to do that also. But however, please don't mistake our experience centers, as I have repeatedly said, for traditional jewelry stores. No, 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 that's not what we do at all. The size of it is very small. We don't do average 3,000, 10,000 square feet stores. We don't have huge commitments to inventory in these stores. We don't have buyer-seller divides where there is a seller sitting on the other side of the table taking out inventory and showing you. Our experience centers are browse-only experience centers. You can go, you can pick up what you like, you can sit at a centralized bliss bar, try on whatever you like and purchase. So the trial room is there, everything is there, and you have a seamless shopping experience, which is enhanced through digital technology. So we are pivoting away from the traditional offline models, bringing our online strengths and digital technology strengths to the offline experience centers. As I mentioned, we already, despite COVID, we've launched 11 of them, and we're enjoying extremely good sales. We are near break-even in our offline business. I think this month we will cross break-even quite comfortably. So there'll be profitable channel in of its own right. And we will be opening a lot more across the country. Naturally and logically, the average selling price of the offline experience centers is significantly higher than the online experience centers, and the more margin-rich diamond jewelry sales is also substantially higher at the experience centers compared to the online shopping. Because the store sizes are very small, it is 700 square feet or 500 square feet in malls. If it is high streets, it would be 1,500 square feet. So averaging out to about 700 square feet spaces, which are very productive spaces with not really any significant inventory at all, except the display pieces. The capital efficiency of these experience centers would be significantly higher than traditional retail. As I mentioned, we'll be opening over the next 4 years, 350 experience centers in the top 200 cities or towns of India, in which there would be an omni-channel strategy to drive online sales. And beyond that, we will not be having experience centers because organized retail doesn't really exist, neither malls nor high streets. And we will continue to deliver through our very capital efficient online channels. Not just our own platforms, we are also listed on all the marketplaces in India where we have also grown significantly. And we are already enjoying very good market share on many of these platforms. We project that because of the offline play, 350 experience centers driving more diamond jewelry sales, which is we make 38 to 40% gross margins versus gold jewelry where we make 24% gross margins. We will be getting to a 28 to 30% gross margin level in the next 3 to 4 years. So we are very much on track to blitz scale, both online and offline. We have the tech stack today to be able to build $1 billion revenue business in the next 4 years. FY26, we will exit March with 7,500 crore revenue, of which half would come from online and half would come from offline. And the online component would be the combination of our own platforms as well as our marketplace presence, where we are already doing extremely well. If you look at some of our past FY22, we came to about 360 crores, 368 crores to be precise, which is 465% growth over FY21. Contribution of offline was 4%, marketplaces was 4%. But to put marketplace growth in context and the potential in context, let me tell you, last April 21, we were doing only 5 lakh revenue per month on marketplaces. This April, we have done 8.5 crores in marketplace alone, which means we talked right at the start about how there are only 50 DTC brands out of 600 brands which are above 100 crore revenue, annual revenue. Melorra on marketplaces alone is a 100 crore revenue business. So that's how large marketplaces have become for us. We project that they will contribute this year, FY23, we will achieve 760 crore plus. It could be anywhere from 760 to 1,000 crores. And offline would be a 20% contributor. Our own channels will contribute 59% and marketplaces in revenue terms will contribute 21%. And in order terms will be more, of course. And FY24, we are projecting 1,700 crores with offline becoming a little bit larger part of our business. Continuous growth in direct organic traffic, which is helping us to bring down CAC in significant ways. We talked about, there were questions around customer acquisition. So we have gone in the last 3 years, we have nearly come down from 9,000 rupees to 3,000 odd rupees. So that's been a significant decrease in the CAC in the business, which has boosted up our profitability and our unit economic performance in a massive manner. Perhaps we are one of the few, if not the only e-commerce company in India to enjoy an absolute contribution margin of nearly 5,000 rupees, which is a multiple of the transaction value of many of the marketplaces, which are in other categories. We're projecting that by April 25, our continuous brand awareness will drive huge growth in direct organic traffic like we have experienced over the last 3 years. And we will get from 1 million people in only direct and organic traffic, which is zero cost acquisition, of course, to 5.8 million organic and direct traffic by April 25 on the back of our SEO efforts and the growth in brand awareness, which will help us to reduce our CAC to about 1,700 levels, which means we would be very much profitable, actually very profitable when that happens. So like I said, we have the highest absolute contribution margins in the digital economy today at 4,665 rupees. Indian e-commerce has not seen absolute contribution margins like this, of course. And from a unit economic standpoint, including performance, with performance CAC, we are at 1.44 in April, 1.71 in March, and with including brand CAC, we are at 0.87 in March. In April, it came down because we had a large brand campaign, but again, in May, it will come back to 0.75 levels. Just so we understand the math over here, when this particular ratio, contribution over cost per order or CAC, becomes 1, we are already a profitable company because we don't have fixed costs, very, very low fixed costs in this business. So as we continue to exponentially grow our top line, a lot of operating leverage will kick in this business. We are already one of the best in terms of, if you see our G&A cost as a percentage of net sales, salary costs, or overhead costs as a percentage of net sales, we are doing far better than other players in this industry. And we will continue to, this operational efficiency will help us as we continue to scale the business even more. So from P&L perspective, we grew from 79 crores to 368 crores in 1 year. And we have improved our bottom line from minus 78% to minus 27%. FY23, we are projecting above 760 crores, can be more. When the year started in FY22, we are projected less than 768 crores, but here we are. Likewise, we could be overdoing on the 762 crore number. We feel fairly sure about that. And on the bottom line, again, we will improve it to minus 13%. We continue to make investments for the $1 billion revenue outcome by March 26, which we are quite certain we will be able to achieve with a 12% PAT. So some of the key summary highlights, of course, is that it's a massive untapped market, $50 billion daily wear market with only 4 brands, including us, and only Melorra is doing gold jewelry in this market, which is the bigger part of the market. Reinventing everyday jewelry segment, highly profitable business model, highest gross margins in the jewelry industry, positive unit economics, and road to $1 billion is very visible and well laid out from here on with the growth of online and offline pieces and the marketplace growth, of course. All of this projection is just for domestic. Let me remind you, all of you. In addition, we have started exporting to all parts of the world. Just a couple of months ago, we've opened up delivery capability all over the world. And we have started receiving some orders, few right now, but I'm sure that will scale massively in the times to come. And interesting about our consumer segment of international consumers is most of them are non-Indians, which comes back to the point I made earlier about a globally relevant product offering because we are building fashion trend-oriented jewelry. Thank you very much for a very patient hearing. If there are any questions, I'm happy to take them now.
Thank you, Saroja. Before I hand over to Varun, I have to thank you. That was a wonderful presentation. And a lot of people are asking me the context of this presentation. So I just want to put straight over here that Melorra is an investing company for us, and we are well-wishers. Their current round, they have recently raised $16 million, where Axis Capital is the lead investor. And if anyone is interested, there is a possibility through a ValueQuest association to go ahead with the same. But I'll leave it to Saroja to give a little bit more details on the recent round and everything.
Yes.
Okay, thanks, Ravi. Yeah. So we do meet investing community from time to time. So this is also, one of those presentations. I often speak at many forums. Ravi offered this opportunity for which I'm grateful. And so in that context, we are having this conference today. From a investment perspective, as I mentioned, we don't require a large capital to scale our business because of the inherent business model itself. So far, we've raised 55 million. Over the next 2 to 3 years, we require another, actually 55. And now, of course, we have raised 16 million already. So we already have that. So let's say about $70 million we have raised so far. And that amount has just hit our bank account. So we have enough money right now. And from here onwards, after 70 million, we will require 30 to 40 million. That's it to get to our $1 billion revenue aspiration. And so the question is open about taking more money in this round at the current valuation, or closing this round and raising the next round at a more significant premium and a higher valuation, for which we have mandated a global banker to raise our next round, who will get going within the next few months. But there is a very limited opportunity to top up this current round a little bit more, not too much more, because we are come to a very low multiple of our current revenue run rate. So the valuation has come to a lower end of multiples today on our revenue base right now. So we wouldn't like to keep this round open for longer, and we will be raising at a much higher valuation within the next 6 months. So a limited amount of capital we are thinking of. I think the right word would be just topping up this round, which has just closed, where, like Ravi rightly said, Axis has led this round. Axis Growth Avenues Fund, which is a pre-IPO fund, they have led this round.
Varun, you can take up the Q&A. There's a long list of questions.
Yeah, that's right. So let me make 2 points here. Usually as a country, we are a little obsessed with either stars or the Bollywood or sports guys. It's this time that we are actually seeing the rise of entrepreneurship last few years. And that is really remarkable, the way entrepreneurs are getting the kind of focus that they deserve, and the kind of attention and audience and capital, right? And the reason why we thought of doing this is because it's, again, quite easy to get people to make a great presentation, a strategy, talk about all the buzzwords. It's very hard to find people who have execution, this amount of rigor that Melorra actually brings up, and whatever Saroja has shared, obviously we have a much more detailed review of all the data, high frequency data, customer analytics that she shares on a monthly or quarterly basis. So basically, it's execution that Melorra really stands out on. Nonetheless, there are a lot of questions that have come on the chat, and I think we should clarify a few areas, because this presentation was more a 30,000 feet view, and a glimpse over all the angles. Due to lack of time, we can't get into specifics of every segments of design, manufacturing, distribution, retail, etc. So a few quick questions. One, about the expectation on the fundraising. What is the timeline that we are closing this round, Saroja?
I guess since most of the money is already come in, I would say ASAP, because we are keen to launch our next round. We are very excited to have appointed a global banker who has come forward to take us to global investors, and that would be almost like a pre-IPO kind of a round, because we're very much working on our IPO journey now. And so they have advised us to close this round as soon as possible, so that they are in a position to launch the next round. And they have been studying our business for over a year in very great detail. As you can imagine, Varun, global bankers don't pick up any and every mandate that comes their way. They have very, very high standards of diligence, and we have experienced it. So they have advised us to close this round as quickly as possible, so that they'll be able to launch the next larger round and take us to global investors. So I would say the sooner the better, but we'd expect, if you want a specific date, I would say if somebody wants to join this round, then by May 31st, if they can confirm with a target date of June 7th, money in the bank, I think we could work with that.
Sure.
Because
what is
the diligence reports are ready. Axis had asked for the diligence to be conducted. PwC has done detailed financial diligence. Khaitan and Company has done detailed legal diligence. The diligence reports, of course, Axis went through in detail before they made the investment decision. So those reports are available for anybody that wants to come into this round. And also, SHA and all of that, the definitive documents have also been completely reviewed and finalized by the lead, which is Axis. So all of that are all ready. So it really the process time can be very, very short once the decision is made.
What is the minimum investment per individual or per entity that we are looking at?
So, Varun, as you know, I have a strong preference for institutional funds to be coming in at this stage of Melorra, but for friends and family of our current investors, we do sometimes take very limited capital from family offices, as you know, and I would say maybe 10 crores per person would be an appropriate amount at this stage of Melorra, because it's a Series D growth company. We are not an early stage venture company.
That's right.
So I think 10 crores per person or per entity would be an appropriate amount for them and for us.
Sure. What is the current ownership structure of our company? Or what are the key?
So unlike many new age entrepreneurs, I think I've been very careful to raise limited capital thanks to the business model strength and at valuations that have been literally doubling every 6 months. In spite of COVID, we have been doubling our valuations. And so I still hold a pretty good shareholding in the company of 25% of the company I own. 35% belongs to a very like-minded investor who's been partnering with me from day one and have been huge supporters, Lightbox Venture Capital, that took the early bet and that was part of every round of ours till the last round when their fund got deployed, else they would have put in more money. So they had put in a whopping $19 million, which is one of their largest investments with us. And then we have other private equity guys like now, of course, Axis. And now we have Symphony Asia would be the third largest shareholder on the cap table. About 9%, 9 to 10% shareholding is held by Symphony, which is a private equity company based out of Singapore, Symphony Asia Private Limited. They also have investments they had in Blue Dart, Apollo, very large investments in, now they have in Misho and a lot of the new age companies they are part of. Of course, they are a global investor with many investments in Southeast Asia, Europe, etc. But they're very big in Southeast Asia circles, being out of Singapore. But yeah, they have put in a fairly big chunk over the last couple of rounds with us. So they would be the third largest shareholder. ESOP also we do have. So let's say between me and the management, we would together have about 32% of the company.
Sure. Right. Just to go over that number, a very critical number is how much of capital has been raised till now, including the 16 million that you raised, and how much of capital that you need now for the next 3 years?
Yes. So we had raised before this round $55 million in equity, and now we have raised 14 million equity plus 2 million debt recently, which has all come in. So that takes us to about $71 million of capital that we have raised so far. And we are looking to raise over the next year or two another 40-50 million only would be sufficient for us to be well capitalized to achieve our $1 billion goal because of a few factors, Varun. One, remember that marketplace growth requires zero capital investments. Online now does not require much investment. Primarily, whatever we are raising is to open more company-owned experience centers. We could choose to franchise out the brand. We do have a lot of franchisee interest coming our way too. But I have decided to hold off on that for a little bit longer and open more company experience centers because what we are doing is really transformative in retail. And so to control the experience of the consumer much better, we'd like to have more company-owned experience centers in the beginning so that we set the benchmark of customer service before we hand over to franchisees and train them. And so we don't need all of the 50 million that we have to raise. But if we have to do 100 companies experience centers, then we have to raise 50 million more. And that's what we would be doing with the global banker later on in the year.
Sure. This $1 billion revenue target in the next 4 years obviously seems overambitious or quite far-fetched. So if you could share your thought, and you've been saying this for the last 2-3 years, it's not being said now. So what is the thought and the math behind this number,
Actually, it might surprise you, Varun, when I went to Lightbox with a business plan. I mean, if you ask the Lightbox partners, they'll tell you, I said that to them on day one. before the incorporation of the company, that by FY26 will be $1 billion company. At a high level, philosophical level, the number is coming from the market opportunity, the size of the market, and the demand for daily wear, lightweight, gold jewelry is immense in India. So that's at a aspirational level, but we have a very detailed business model, which of course you have seen before the your own investment, which is very, very micro. And every single metric has been mapped out for the next 4 years, month on month. So we are, and of course, from every year or every time I have investor conferences, at least one member of the audience tells me that your plans are very aggressive and ambitious. So this is not a new question to me. And I have said that, look at our demonstrated performance. You get our model today. Let's talk 2 years from now. We would have delivered every single projection of ours, not just on the top line, but on each and every operating metric also. We are fairly accurate in our projections. That is because there is very detailed workings that we do. Like I took you through at a very high level, how much traffic do I need in April 25? What would be the conversion rate? What are the initiatives that will drive that conversion rate? What should be the average ticket size? What merchandising range do we need to have to be able to deliver that ticket size at an aggregate level? By category, by subcategory, by price band within subcategory, everything we have already planned out. Our merchandising team does that work. What are the channel mixes that we should have? What should be the customer acquisition cost? What should be the marketing investments? How much should go into performance marketing by channel, by Facebook, by Google, by affiliate partners, by app, by platform, right? How much should be on brand marketing? Within brand marketing, should we be on OTT, or should we be spending money on, ADL activities, or should we be on social media? All of these decisions, we have nailed down to the nth degree. And that is why I'm a big believer of planning, not at a blue sky levels, but micro planning. Each of our functional leaders do with their teams. So it is a bottom-up plan that evolves for us. And there's a very detailed Excel sheet, as you know, that we have put down, where each of the metrics is presented to me by the leaders and their teams. And each of those metrics has a strategy with a timeline to back it up. So it is not a crystal ball gazing sort of an exercise. I have stayed away from that all along. And hence, we know exactly how we are going to deliver which month's revenue. There are no surprises or margins for that matter, or any of the key operating metrics or financial metrics. We have a very detailed approach and the strategy that we review every Monday. I do review how we are moving on those initiatives and on which initiative we are lagging behind, and how do we resource that function better if required. So every Monday, I do a 3-hour review with all the functional leaders who present to me how we are moving on our roadmap activities. Both large and small initiatives get reviewed in that. So I'm a big believer that you plan very well at a detailed level, and then you review even more that plan and make course corrections as required in order to be able to visualize and deliver to whatever you have projected. Hence, we don't believe that this is an aggressive plan at all. We know that we will deliver it because we know how to deliver it.
Right. So very few people can even think of a number that large, let alone execute it. But nonetheless, I think we're seeing the detail of it. I want to get to the customer funnel. You need a very large customer base to get to that number. So if you could speak about your customer acquisition, the whole channels of customer acquisition, branding, reach out, the whole go-to-market, and what is the costs associated with that customer acquisition?
Okay. So basically, most of our marketing investments, we do anywhere from 12 crores to in the seasonal times like Diwali, our marketing investments may go up to 18 crores a month on the top, hardly ever more than that. And that happens only twice a year, by the way. Otherwise, our marketing investments are in the 9 to 10, 12 crore range. It's been very steady. In spite of revenue growing, that has been steady. The quantum has been steady, which is why you saw advertising to revenue ratio improving drastically year-on-year. Now, where does this marketing investments grow? It grows mostly into customer acquisition, not so much yet on customer retention, though we are on the verge of launching a lot of initiatives around customer retention too, including a very innovative loyalty program soon. So in terms of customer acquisition, I would say 90-95% is digital. I'm a big believer of digital in every way. Call me a convert from the traditional industry, but digital channels are very measurable. And the other advantage of digital channels, Varun, is that unlike TV, you don't have to commit. And even if you want to pull back, you can't pull back on TV or print ads, right? So for whatever reason, if there's a disruptive event, you have to go ahead and whatever media commitments you've made, you have to spend it, right? Let's say the campaign isn't functioning that well. You still have to spend money. Whereas in digital, you track in real time what is the growth of all the leading metrics. How many visitors have come? How many apps got downloaded? How many organic visitors on each of the platforms? How is the top of the funnel looking? What is the engagement rate, right? We track many, many leading indicators on a daily basis, like what is the sessions that each person is giving us? What is the time that they have spent? Where in the funnel are they dropping off? Which page are they on? Of course, like all e-commerce companies, we track the entire funnel every day. How many have added to cart across platforms? How many have favorited? And how many have actually taken the efforts to generate a pre-sale inquiry to our assisted sales function? We do have a customer care team, a very large one, that can assist. And a lot of the inquiries come through chats or through website, through WhatsApp, I'm sorry. So how many pre-sales inquiries came for the day? Every day we generate an EOD report with all of the leading metrics, right? So we map the entire funnel on a daily basis from the top of the funnel to the bottom of the funnel, which gives us a very good sense of how much will all this ensue into orders, right? What will all this lead to in terms of a daily order run rate? So that, of course, we know very, very well today, and how much we have to invest to get an order. So the cost per order also has come into a controllable, predictable number. Now, how do we bring that cost per order or CAC down further? Is through the growth of brand marketing investment. So when we first started Melorra, 100% of our investments were in performance marketing channels. Today, that number has come down to 50%. So brand marketing, the advantage of brand marketing is you don't have to perpetually do it. You do it one time, you grow the brand awareness, it leads to brand awareness is a one-way street. Once you're aware of a brand, you can't become unaware of the brand again, right? So it is, you don't have to keep on spending money to generate sales in the future. Varun, are you speaking? I'm not able to hear you. I feel like
not speaking. Go on.
Yeah. So brand marketing is the way to go for online companies, and we have been investing in it for the last 2 years and seeing very good results out of it through the growth of all organic and direct traffic. And then, of course, offline experience centers, when they come up, then you don't even have to invest that much in marketing. So if you see our projections, we have said marketing investments will be substituted by offline presence, right? Because since our offline centers are in high walk-in malls or high walk-in high streets, they generate awareness in of themselves, right? So they act as brand awareness generators. So hence you don't need to spend more money on marketing. So we work with all of the digital platforms to answer your question, be it Facebook, Google, Instagram, YouTube, and also newer like Glance. We recently did a roadblock for Akshay Tritiya on Glance, which worked very well for us. We did a complete roadblock on Times of India digitally, not in a physical ad. And that led to a huge spurt of traffic on Akshay Tritiya day for us, right? So there are a lot of digital strategies that we follow in order to be able to generate the traffic that we require.
Okay. I think this has been a common question by several guys that we're going offline in a big way. And since we claim to be inventory light, asset light, how would that change our inventory position, inventory turns, the whole business model? How will that change as offline also takes a significant portion of the capital?
From a offline perspective, again, I would encourage everybody to visit our centers. These are not the kind of high inventory investment oriented shopping centers that you're imagining typically. These are more experience centers with very, very limited inventory because the space itself does not allow for too much inventory to be accumulated at all. So we call this the minimal inventory experience center model, where per center of 500-600 square feet, we might have only 200 display items or 300 display items out of the 16,000 plus designs that we carry. So this is more for a touch and feel experience than anything else really. So please don't think, the moment people think offline, they think large stores, huge capital investment. That's not our model. And that's not been, in fact, the model of most DTC brands as they have gone offline, right? I draw your attention to companies like Lenskart, which have operated very productive spaces with not too much inventory in the experience centers. So basically you have some display items and you encourage the customers to place an order and then you deliver it later, the customization model that we are very strong at online. So that is why the word store is a little wrong word for our kind of DTC brand offline strategy. Experience centers is the right word, right term, where we really don't carry too much inventory. And you will see that when you visit our experience centers. So not to worry. And that is why our capital requirements is not going to be very large.
Right, right. Just 2-3 more points. You've shown gross margins going up significantly. What would be the reason for that, if you could share it?
Yeah, so as like I said, we explain everything mathematically rather than, I think, verbally would be a little bit harder to understand. So this is the path to higher margins where everything has been quantified. As I said, a big lever of margin growth is the expansion of offline, where 46% of our orders in offline experience centers are product categories which have 38 to 40% gross margins, which is the diamond and the gemstone jewelry. We see 38 to 40% gross margins today, compared to gold jewelry, where we experience 23.5% gross margins today. Of course, at 23.5% gross margins in gold, we are the highest in the gold jewelry industry by far, right? I mean, we are double of the market leaders' gross margins in gold jewelry. We are approximately on par as far as diamond jewelry is concerned with the market leader margins or anybody else's margins. So as offline becomes today, last year it was 4%, this year it will be 21%. By FY26, it will be 50% of our revenue base. It is only logical that 40 to 50% of our sales in the experience centers will be the higher margin diamond jewelry and studded jewelry product compared to our online, where it is 5%. And so the margin profile of the business, simply because of the additional channels kicking in, we don't have to do anything. We don't have to raise prices or anything to get to those margins. The more offline business is adding to the top line, the more the margins will automatically go up because of the higher diamond and gemstone ratio inherently in offline. We have factored in a little bit of impact due to brand premium, which we have not brought in yet, which is only about 0.6%. And then we have factored in 0.31% in impact on margins positively due to sourcing efficiency. Let me spend a minute talking. So studded share increase, as you see, we have factored in 2 buckets over here. One initially of 1.5% bump up due to the 60 expansion centers, and next year we have projected over 100. So that will give us the leverage to get to 25 roughly 24.7, and then a larger increase in the period from November 23 to December 25, because the offline centers that we're setting up now will start maturing, and also a larger offline expansion will happen by then, with 350 experience centers being opened by then. So that will give up a much bigger bump up of 3.7% to get to 28.4%, right? Now, this sourcing efficiency, which we are talking about, is when the volumes go up, we are able to negotiate much better prices from our vendors, which is logical. And we have done that time and time again. By that, let me put some specific numbers here. So initially, when we started Melorra, we used to pay to our vendors 550 rupees a gram for making charges for gold jewelry at much lower volumes, of course. Today, with the volumes that we see in the business, we have brought down that number from 550 rupees to 170 rupees. That has been the extent of decrease in sourcing costs. And there is still room to get it down as the volume scale much more. Likewise, on diamond jewelry, we have been sourcing at 26,000 at the start. We have brought that down to 23,000 rupees a carat, and we will be able to bring it down to 16,000 rupees a carat when the volumes go up in diamond and gemstone jewelry over the next couple of years. So that will help us. We estimate more than 0.31%, but we are projecting at least a 0.31% positive bump up in sourcing cost, a margin impact due to sourcing cost reduction.
One question. Why would started go up by experience centers?
Because today it is already at 46% in our experience centers, because people don't feel comfortable buying diamond jewelry online, because they can't judge the luster of diamonds or the sparkle of diamonds online, but they can do it much better offline. So today our experience centers have 46% of sales coming from diamond jewelry. Online, we sell only 5% of our revenue is on diamond jewelry. Whereas for gold jewelry, people don't have the same reservation shopping online, because the color of gold, everybody knows. All they look for is a trust mark. Is it the right caratage and the right purity, for which we have the hallmark. Since we are anyway hallmarking, that factor has been taken care of. So people don't have a problem buying gold jewelry online, but diamond jewelry, they don't buy that much online. Unless they are repeat customers, then there is a greater chance that they will buy diamond jewelry, because now they know the company, they trust the brand, they know the finish and the quality, they've already got a gold jewelry with us. Then the chances of them buying diamond jewelry are higher. But first purchase, we have hardly ever seen anybody buy diamond jewelry with us. But even repeat customers, it is not the extent it is in the offline centers, it is not that much. Yes. Yeah, sure. Sandeep, why don't you come here and answer that specific question while I take a small break? We'll give you specific data on this rather than giving a generic answer. We can't share the data here, no? Yeah. Okay, then you can perhaps at least read it out. Yes, Varun?
Right. Just a couple of things people have asked around manufacturing. How many vendors do you actually have, and how will that pan out as you scale up to that, such revenue? Because we're outsourcing completely,
Yeah. So we have about roughly over 24 vendors today, about 25 vendors, gold, diamond, gemstone, all over India, chains, coins, etc. And the current vendors, many of them are extremely large vendors in India that work with other industry players. So they have sufficient capacity. We occupy a very small percentage of their capacity today, first and foremost, Varun. Not of all our vendors, but at least 50% of our vendors are massive jewelry manufacturers in India, of which we might be the smallest customer today. And they are going on making more and more investments in adding more machines and more people to our assembly lines, because they have to run a separate assembly line for us, since we don't manufacture the standard traditional way. So that they are doing as the business is scaling. Right? Now, in addition, India is the global hub of jewelry manufacturing, right? There are plenty of vendors that we haven't even gone and spoken to, that we do talk to from time to time, but we have not brought them on board yet. So we can add a lot more partners if at all we run out of capacity of these vendors. But our manufacturing head has very good details on this, specifically vendor by vendor, what percentage of their capacity we are using today and what capacity we can go to. So, we can set up that call also for those that want a far more specific answer than this. So, but suffice to say, there's enough capacity right now with our existing vendors. For example, we do work with, Dua Gold in Coimbatore or an Emerald Jewelry in Coimbatore, and they have factories with 5,000 people already, So maybe out of 5,000, 50 people will be working with us right now, or even less, So there is sufficient and more capacity to cater to our growing demand. But if required, we always keep an eye out for great vendors, and there is an onboarding process, the KYC and the onboarding process. So we do that. And of course, it's a high requirement for them to have specific casting machines, 3D printing machines, and manufacture in this just-in-time manufacturing model. So we work with them, we train them, we onboard them for our quality checks. We do detailed inline quality checks while the production process is on, because there's an end customer waiting. And after the product is manufactured, we put it through 25 detailed quality checks as well. So all of these criteria should be met by the vendor before we onboard them. But there are sufficiently large manufacturers in India, because remember that India is one of the world's largest manufacturers of jewelry. We sell, out of all the jewelry sold in the world, 30% is manufactured in India of all materials. So there is huge capacities, and export of gems and jewelry, as you know, is a very big sector for us. And so there is no dearth of world-class manufacturers that we can go to and bring in additional capacity as we scale.
I think it's almost 2 hours. You need a break now. But
Now, we'll just quickly answer the frequency question that was asked by somebody in the room. Yeah, so you can, we'll give you the industry stats and then Melorra stats on frequency and repeat.
Yeah, so we have done analysis, based our existing database on customer purchase history. And given our category, we have done the analysis over a longer horizon, which is, 3 years, 4 years kind of horizon that we have looked at, the cohort analysis. Given the analysis and the data that we have overall across channels, our repeat rate stands at, and this is revenue repeat rate. Okay, repeat rate stands 18% for a 2-year period, 30% 30 for a 3-year period, and 49% for a 4-year period. And then if we look at a channel specific analysis, our offline, right? So our first offline store came live on December 2020. So we have data for last 15 months or so. So offline is showing a very high repeat rate. The 1-year repeat rate for offline is already at 47%. And the same analysis, if we do on the app, our app shows a 1-year repeat rate of 34%, and 2-year repeat rate is significantly higher, which is 80%, 80. Right? So this is the cohort analysis, the repeat analysis. Now going to the purchase frequency, see the
frequency.
Yeah.
That was repeat. Now talk about the
frequency. Yeah, so the industry average is for jewelry as a sector, including wedding jewelry, is 1 purchase every 6 years, right? And the everyday jewelry category is 1 purchase every 3 years. Now, if we look at our data for the customers who have been with us for last, say, 1 year, the average purchase frequency is 1 purchase every 9 months. And for customer set who have been with us for, say, 2 years, the frequency is 1 purchase every 17 months, 17. And for customers who have been with us for 3 years, they are purchasing one product every 23 months. So we are significantly doing better than the industry standards, right? Which is 36 months. So, and based on the cohort data that I just explained earlier, the LTV, I think some questions were around that. On a fully loaded CAC basis, which means that we include the brand marketing expense as well as the performance marketing expense, the LTV to CAC stands at around 1.5x for a 4-year cohort analysis or repeat analysis currently. And without brand marketing, the same ratio stands at around 2.8x. Right. And as Saroja mentioned, as we roll out more offline stores, our CAC will significantly come down. Yeah. So then we will be reaching, the LTV to CAC around 6.5x for a fully loaded one, and around 8x to 10x for a excluding brand marketing ratio, LTV to CAC.
So just two closing questions. One, the structure, our design team strength, technology team, how many people, overall, what's the team structure? And secondly, exports also is a large opportunity, global Indians or global design, demand. How are we looking at these things? Just two final closing questions.
Sure. No problem. So basically, if you look at the overall team's size, we have about 300 people in the company across different functions. What are all the functions in the company? We have, of course, the tech team. We are a tech company, consumer tech company. The tech team and the product and the UX UI team together is about 50 people now, with a CTO and a head of product leading these functions together. Our design team, which is the design studio, which has a combination of 3 different skill sets, which is jewelry designers, CAD designers, and rendering experts who bring the product to life on the website. What you see, Varun, on the website or app is actually a render, right? Which is made from a CAD file. All of it is through very advanced software that we have, and very advanced hardware machines also these designers use. So all of it put together would be about 60 people, the design studio. Then we have the supply chain team, the operations and the supply chain team, who do the operations and the logistics part, because we have warehouses across the country. That would be about 20 people so far, 20-25 people. We have a very large customer assistance team, a customer care team, which comprises of pre-sales and post-sale for people that do want to talk to us. That would be, again, a 50 to 60 member team today, which has team leads and then a head of customer service who reports into head of operations and customer care. Then we have the sourcing team, the manufacturing and sourcing team, which would consist of vendor management people as well as quality control teams. And that team would again be about 20 people spread across towns where we are manufacturing bases are there, like Jaipur, Coimbatore, Mumbai, Hosur, Bangalore, and setting up now in Surat and Kolkata as well in the next 2 to 3 months. Then we have the merchandising team, which is a small team, the analytical arm, which analyzes all the sales patterns, which is responsible for revenue generation, margins, delivery, and ticket size. 3 things that impact financials in a big way, headed by Suman Verma. And her team would be a 5 to 8 member team, who also has trend forecasters, etc. in that team. Then we have the finance team, which is about 15 to 17 people. Naveen tells me 17 people now, which includes legal team as well, because we do a lot of the legal work in-house. Then we have the offline team headed by Vivek Jhavar, in which we have, actually it's all right here. Thank you. That is helpful. We have about 70 people in our offline team. And we have 20 people in our marketing team. Marketing is a very core function for us, headed by Kushal Singh. We have 20 people in our marketing team. Tech product is all. I think, those are pretty much the core teams in the company. So roughly it comes to about nearly 300 people.
Sure, right. And
exports, yes, exports, on that point, I couldn't agree more. Especially, of course, gems and jewelry, India exports so much. And I think Tanishq has also said international is a very good, big growth plan for them. However, compared to other market leaders that do sell a lot of jewelry outside, we don't restrict ourselves to the Indian diaspora. We don't need to, because our product is not got a country of origin tag. We are not doing traditional ethnic Indian designs. We are doing a globally relevant design because we build global fashion trends into our collections. So all of our products can easily be worn by women anywhere of whatever nationality. So we have just started exports. Initially, we had enabled logistics and shipment to US, UAE, Singapore, and UK. But we have also seen a lot of organic traffic from the rest of the world. And when those customers used to reach out to us, we did used to deliver to them separately, without actually enabling it on the website. We've had orders from Dar es Salaam in Tanzania to Geneva in Switzerland, to people in Florida, to Texas. And these are the locals, not the Indian people over there. Australia, New Zealand, we recently did a very big order for a woman from New Zealand. So because of this frequent ask, we have now put it up on the website that rest of the world also you can pay and order, and we will be able to ship to you. We will soon, over the course of this year, set up warehouses in these locations as well to bring down the freight costs, so that we can do more bulk shipping. So hence, we will be soon setting up a warehouse. We're working on a project to set it up for US in Illinois, and so on and so forth. We will be expanding. The other way of tapping into the international business opportunity, Varun, would be to list on marketplaces, and we are doing an integration with Brown Tape. We evaluated both Brown Tape and Unicommerce. We have picked Brown Tape, and that integration is on the verge of happening, which will then enable us also to be listed on international marketplaces like Amazon in the US and other countries, where also a lot of jewelry is sold. Middle East e-commerce platforms, and like the Flipkarts, the local Flipkarts of other geographies. And then, of course, Amazon, we have shortlisted 12 countries to be listed on Amazon going forward. So we are because we are already listed on Amazon in India and they're growing with us, they are enabling conversations with the category managers of the jewelry division of Amazon in these international geographies as well. So in listing on international marketplaces will give a big boost to our export story too. And then finally, of course, we would make the necessary marketing investments to grow the brand awareness in those markets. And even later, we would set up our same digital experience centers. Because if you see our experience centers, if you walk into them, you will literally feel it is not an Indian store with any Indian sensibility. It's a globally relevant shopping center. So they could be coming up anywhere in the world. And so that would be the final step. But our plan of $1 billion revenue by FY26 does not include any additional bump up from international business. It's only local Indian market because the market size is so massive. But we will be taking steps. We have already started, and we'll be taking more and more steps to tap into the international markets. For Melorra, it's a very relevant question. And I would also like to point out to you that international markets provide a far higher margin opportunity to enhance our margin potential because of the local choices being so expensive in jewelry that even if I were to add, even if I were to double the prices of our jewelry designs for international markets, it would still be very affordable for them compared to their local jewelry choices. And that would enhance our margin profile even more, right? And of course, do remember that in the Western world, Europe and US, etc., diamond jewelry is the preference, not so much plain gold jewelry, which means margins again will be enhanced because on that we make 38 to 40% gross margins. Right. So plenty of opportunity to tap into both on the top line and the bottom line, the international market opportunity. I do agree with that question.
Ravi, go ahead. By the time I get hot water for Saroja.
Yeah. Saroja, just one follow-up to the organization that you're building. A lot of people, since I set the stage by saying that you're an entrepreneur that we are all looking to be bowled over by, how much is the organization dependent on you? We want you to be staying healthy and fit, but what would happen if tomorrow you were to be hit by a bus?
Oh my God, that's a very difficult question for me. I hope I'm not hit by a bus anytime soon. But having said that, I think in the initial days, to be honest, there was a lot of dependence. And when I say dependence, I literally could not take any annual leaves or holidays without my phone buzzing from all the functions. Okay, but I have to say that over the last 3 years or so, it has become much lesser, the dependence on me. I have a very strong leadership team that I am not operationally involved in very minute details. I don't have to be, I like to be, that's my personality, so that's different. But the business runs just fine without me, and I put that to test by going off on international holidays once in a while. And my phone doesn't buzz that much anymore. And an opportunity is coming next month. I'm off again for 15 days, and you will see. Unfortunately, last 2 years, even if I wanted to, I could not go away, right? But now I think I will fully take advantage of the very strong team strength that we have. So I think our leaders are very, very strong and capable individuals. And luckily, most of them have been with us for enough time to have ingrained not the strategy, because they come up with the strategy and the roadmap and the initiatives themselves, but the cultural aspects. We have very ingrained culture. Just to give you an example, Ravi, we do a performance appraisal every year, like most companies do. And most companies have an appraisal on the KRA, as it is called, or the functional goals. We, of course, do that. But in addition, we evaluate each and every company on 7 core values, which are very important to us. Things like, are you vocally self-critical? So that people don't hide from talking about the shortcomings in their own performance or their team's performance. Are you customer obsessed? Not competition obsessed. We really frown on that, but we say, are you really serving customers from your heart? Ownership, because entrepreneurs like to see many entrepreneurs in their company. So for example, we have ESOP not just for the leadership team. Every single member of Melorra has shares in the company. I've been very particular about this from day one. Everybody, from the senior most to the junior most members of the team, is a shareholder of the company. So they have a very strong financial interest, just like investors, to grow the Melorra business in the right way and an enduring way. Endearing, of course, but enduring also. So the cultural aspect is what I've spent a long time building. The value system of the company. Integrity, is extremely important to us. Bias for action. We are a startup. We like to execute. And that is our biggest strength as a startup. And in startups, we are, I think, very good at execution. So we see a problem, all hands on the deck, we jump in, whichever teams have to come together, and we fix those problems, right? We do RCA, root cause analysis, and we fix those problems. Our future depends on it. Our survival as a startup depends. Digitally, you get found out digitally much faster than if you are a traditional company, because every single visitor knows if the website has gone down even by a second. There's a huge amount of escalation, compared to if a store manager is not in the store, it may not come to you that quickly, right? So consumer listening posts are very, very strong in digital companies. So we have no choice but to act and act fast. So bias for action is a very core value of the business. So like this, we have articulated 7 core values. And I must say, in that articulation of the 7 core values at the start, we were inspired by Amazon, and their, not just the definition of the core value, but the detailed definition of it is there in everybody's annual appraisal cycle. So we rate people on what is the demonstration of this core value behavior. So there was a lot of dependence on the founder, but I think today that has been quite deeply ingrained. It's always a journey, of course, so dependence is much lesser now than it was at the start. And I think as the business grows more and more, today, most of my time is spent with folks like yourselves doing these kind of presentations, which tells you that the business is running just fine without my involvement. Yeah.
No, I wish all the best for your health. I definitely don't wish that you ever get hit by a bus, but just from the point of view of planning a second line and, having an organization that is not person dependent.
Yes, of course. So not just the leadership team. We are also brought in more and more mature leaders as the business has scaled. But we have something, the leadership team is called Melorra Leadership Team, MLT in short. But we also have something called the EMLT, the extended MLT, which is the one downs from the leadership team, who also we are training and, for succession planning and things like that. And, so for example, we do spend a lot of time grooming our talent. So in fact, 2 of our leadership team has been in-house groomed. Suman Verma and Kannadasan have been people that were with us, joined us at a lower level. We have trained them and they have taken over as leaders last year and are doing a phenomenally good job. So, we do favor growth of our people when they demonstrate strong performance and cultural integrity, I would say. And we will continue to invest more and more. In fact, one of the reasons I hired Deep is because he's a very good leader on learning and OD kind of work and developing leadership team. That is his core strength as an HR leader in the country. And he did that for 8 years in Barclays, developing the leadership team at Barclays. So that's why we onboarded Deep last year. And he's working in that particular area. So I totally understand where you're going with that question. No offense taken on the bus question. I understand that companies are organizations, founders, of course, are the soul of an of a company. And, but I am not, what should I say? I'm not a typical promoter, right? Where, none of my family is in this business, for example, right? It's completely professionally run organization. So where we see the right competencies are lacking, we are bringing that in place all the time. So there is a project that we have called Future Ready Melorra, Future Ready Organization Structure. Right now it has been built in-house, but we will be partnering with one of the big consulting companies soon to future-proof the organization structure even more. I did this work in Titan when we worked with McKinsey. We looked at the organization structure. We all understood where the competency gaps are there way back in 2001. And then we built, and in fact, from that study came out the need to set up a merchandising function. And I was asked to do that work by Bhaskar. So yes, we will be partnering and with a consulting company like a McKinsey or a Bain to build a future-ready organization. But we have completed that task in-house and we are building in those competencies. So yeah, so I think we are in a good shape from organization strength standpoint today, but obviously it will get stronger as the business builds more and more.
Great. Varun, any last questions before we wind up?
No. I think it's more than 2 hours. I think she needs a break. But I think one thing I should share that you are far from a startup, and we've said this to you earlier in terms of your thought and detail, and hopefully in terms of size also now in the next 1 or 2 years you would be anything but a startup. But
I think we like to call ourselves Varun, we like to call ourselves a startup because I've been a professional manager all my life, 25 years in corporates, as you know. So the rigor and thought process and planning and execution comes from that background of mine. But why I say I'll be a startup, even at $1 billion, I'll say I'm a startup. Even at $2 billion, I'll say a startup. Because I've worked in large companies, global companies like Dell, Indian MNCs like Tata Group and Titan. And I can tell you the culture of a startup. The size is not what is defining us as a startup. The culture of failing fast, bias for action, data analysis and rigor. Traditional large companies are very slow to react to market changes. Startups are not. We spot opportunities and we go behind it with ruthless energy. Ruthless energy is the word I'd like to use. So from that point of view, every time you say we are not a startup, I'll bring it right back. So culturally, we are a startup and we will always be a startup.
No, I think you hold 25% equity. All we wish is that you become a billionaire. And people are home.
I'm not doing this for the money, Varun. I'm doing it because it needs to be done. There was a market opportunity staring me in the face. Nobody was doing anything about it. Not the way I would have liked to see it. And
Ravi
hence
says the same thing for ValueQuest. We, incidentally, we are at the cusp of both experience and the right age. So, the energy of a startup and institutionalized. Yeah, it's great. Yeah. I think done from my side, Ravi.
Thank you so much to all the participants. I think they've been with us for a long time. A lot of them have stayed on for over 2 hours. So thank you to their patience, actually.
Yeah. thank you all for coming and listening to us patiently, especially if anybody has any kind of a question or a follow-up, please feel free to connect with Varun, myself, or we have put one email ID on the chat as well. Thank you so much.
Thank you.
Thanks a lot,
Saroja.
Varun
Thank
and
you,
Ravi.
everyone.